Oh no. What's up, everyone? I think I'm live. I'm not sure yet. Give me a minute. And yeah, it's all good. So I need you to help me out. Let me know if I'm live. Put something in the comments below and or wherever it is, and then you can see. So yo, what's up, man? It's been a while. Yes, indeed. I don't think I made a video like in over a week. All right, so that's a good thing to close this out. Yeah, I'm not even quite ready. So the market, let's figure we talk about the market. Usually when I don't make a video, I just like going live so I could answer everyone's questions or whatever. What you got in mind. For the most part, I just been sitting back and enjoying the ride because when the market was going down, I was like buying I was staying with the tech stocks. I was kind of repositioning the portfolio. A lot of spreads I have on. So as stocks go down, that short strike is making money, right? And it almost whittled down to where I collected all the value out of my short strike. So I'm repositioning, I'm closing out the shorts. And now as we going back up, I'm like long calls on a lot of tech stocks. And I always say that they always come back to growth. Everything else is temporary. Yeah, I can say everything is temporary, but they always come back to growth stocks because that's what's working. If you think out in the future, right? Is it going to be about Coca Cola? Is it going to be about McDonald's? Is it going to be about Kraft Foods? How about the railroads? Is it going to be about them in the future? Is it going to be about J.P. Morgan? So it's about tech. Tech has the growth, and it's up and down. And when they come down, that's the time to just reposition and start buying for the long term, right? So when I talk about calls or puts, I ain't talking about puts, but when I'm talking about calls or call spreads, I'm talking about leaps, man. If you know me in options, I'm always in the leaps. So I kind of play options as long term type stuff. Okay, the long term trades for me. A lot of times I sell a call spread. I'm sorry, I buy a call spread, and I sell a put spread, right? To kind of finance that long call spread. And I'm going to show you a trade that I did today that did exactly that. But I figure we could start with talking about the market. What's up, Errol? It's been a long time, so I'm glad you said yo Dre because I didn't even know if I was live. You know how many times I start? Well, you could start a video like I did, talk for a good 3-4 minutes, and then you realize you're not live and you got to do it all over again. But anyway, let's go ahead and talk about the market. Let me get my screen correct here and go to my desktop, right? There we go. You don't like that? Me in the corner like that? Nah, I don't like it. Anyway, so here's the Dow. It's kind of funny how you see in the NASDAQ lead, and the NASDAQ was on fire. It's just been on fire for the last 5 days or so. And then you look at I'm looking at today's action. This is FinViz. One of the I love pulling up this website, finviz.com, and just kind of glancing at the market. I just feel you could see everything at one glance. You can see kind of what the averages are doing, and just a glance at the heat map, and just kind of see what's popping and what's not. Even though tech is up 0.33%, and I guess a lot of that is Apple because you look at Google's up, Microsoft up, but very little. Facebook's finally taking a breather. Unbelievable run from the bottom of the channel, which I'll bring it up. It was about 260 all the way up to an all-time high. Going into earnings, so what has been happening, Facebook always runs into earnings, right? It's one of my favorite plays. I didn't take it this time just because of the political action and all that stuff going on, but I like it's almost a guarantee. I think it's running into the earnings a little early this earnings season. And you see Amazon's up, Tesla is hanging in there. Nice little run. I started having my doubts about it, but I gotta admit, man, that run for the last couple of days in Tesla has been fire. Ever since they reported those numbers, Tesla just fire. It's just crazy. So it's up above $700. So let's look at some of these charts and see what's going on. Maybe I should put myself in a corner. Looks more interactive, right? Is that me down there? No. How about here? Yeah, that's it. Me in the corner. I have jewelry box in the house. Just looking at see what's going on here. Chat restream. What is that? Get rid of that then. All right, so here we are. This is the Qs, and I think in my last video, one of my last videos, I don't remember exactly when, we was talking about this, and right here, I think I called the video where the market was about to turn. I wasn't sure if it was going to bounce here. I was like, there was a lot of stocks that where if it would have broke here, the market would have went a lot lower, because a lot of stocks that make up the NASDAQ, oh man, they was looking ugly. They was right there on support, and there wasn't support further down for a while. I was like, oh man, some of these stocks, if they break, it's going to look ugly. But looks like the market bounced here when, it wasn't sure if it was going to bounce, and then boom, now it's taken off. So you got to like the Qs. I mean, it's not at all-time high yet, like the S&P, but it's going up, and I love that bounce off the support. See, the last time we bounced off that line was November, and then the time before that was September. So this trend line actually has it's valid. We got 3 touches, and the more touches, the more valid this thing is, and you can almost play this trend line to know when to get out. We was up here before in February, and so this from the top to the bottom of that trend channel, it hurt. It was down, what is it, about 12%, but some of the stocks were down 20, 30, 40% in this 12% average drop. So if this breaks, I think we might have something to worry about. So I'm actually glad it did bounce, and we're starting to rise. Look at the stochastic right here at the bottom, man. Look how that's just ready to blast off. Crossover. You got the crossover going, and it's just getting ready to blast off. So I'm really feeling comfortable with the NASDAQ, man. Let's pull up the SPY. And you can see, I got to admit, I'm not feeling as comfortable as here. Yeah, it's way above trend. It's just up here. It's just elevated. Now, we did have some resistance. Trying to draw a line here. And you can see it broke through, but I don't, this is the SPY. I don't think it keeps going. I don't think the average is going to go straight up like the NASDAQ did not too long ago. But I don't know. Maybe sideways action, come down, But you can see how it's kind of at the top end of the range, right? So that's, you see how we got the NASDAQ coming off the bottom, off the trend line. We got the SPY at the top end. So that's why I'm liking the NASDAQ a little better here. And since I'm at it, looking at the averages, look at the IWM. It's up 0.44 today. Looks like it's the leader. And you can see it's right here. It's kind of coming off that trend line as well. Multiple touches and actually multiple breaks below the trend line. Right, so, but they got bought up real quick. Look at those stems right there. And I'm looking at the weekly, right? So you can see the stems went down and up, they sold it here. We can go at the daily and take a better look at it, right? Look at that, right? So it looked like it was wanting to break, and then now it's just taking off, right? Not necessarily a takeoff, but coming off that trend line. It could still be early, but what's not early, it's still on trend. So that is the fact. So just kind of keep an eye on it. We might bounce up to the top of the range, or maybe we can fail and then go through. So let's keep an eye on that, but like I said, it is on trend. So it's all good. It's all good on the IWM. I want to talk about some specifics. Hold on a minute here. Where is my screen here? Yeah. Let me talk about some specifics. There we go. Let's talk about some specifics for the third time. Let's talk about the cruise lines real quick. And one specific is RCL. That's the one I've been playing, Royal Caribbean. I'm in a pretty good trade here. And I just sold, I've been selling put spreads on them. By the way, I haven't been making the videos, but I have been trading for sure. Been selling the put spreads on here, because see, look at that, right? See all of this down here? I've been selling all of this area, and it's been working, right? And I even got, I'm even short a naked put, but in the money, way up here at, let me go to the weekly, way up here at 96, right here. And you're like, yeah, I know, but the stock price is not 96, it's below. Right here, I was short a put spread for about a month. at the 96. I sold it for $6 and change, right? So that kind of brought my break even to 90. All right, as you can see, it just closed out last week, but the stock was nowhere near 96. So I brought that back and sold another one about 50 days out, and I collected another $2. So overall, and I sold the 95 now because there wasn't a 96. I wanted to stay at 96, but I sold the 95. So I hope you kind of understand. Let me see if I could I bring the options out? Maybe that'll make it easier. Not really. I'll keep the chart on. If you have any questions, just ask. So another 30 days out, I bought the one back. I bought the 96 back and sold a 95 and got $2 credit. So overall, I got $8, which is $800. So if this thing is above 95 in the next 50 or 49 days or so, the $800 is mine to keep, and I'm just done with the trade. So even though it's not going above there yet, and the first one I bought back at a loss, I still kept that money. And then I sold another one and kind of, bought it back and sold it and still collected credit. As long as I keep collecting that credit, I'm making money on the trade. I'm just being very patient with it. And so right now we at 90, another $5 more. I made $800 on the trade and didn't even touch the stock. I love that. And if I were to figure out my my annual gain, it would be something like probably 100% or something like that. So I like that trade. I've been in this trade. I'm just patient with it. If it kind of hangs out here, I'll sell another one. If we get close to the 95, and maybe I'll do a video on it. See, this is why I got to do more videos. If we get closer to that 95 strike at the time it expires, I'll sell another one. And just keep doing that until eventually it's above 95. If we look at, let's see, that's about 95. Let me draw a line. Right here, right? If we, if we eventually get above that amount of successful trade, we're going above there. I don't care what you say. We're going above 95. All right, look at that trend, right? I'm just going to draw not necessarily the trend line, but you can see the trend, which is up and higher. So I'm just playing it for right here, and I'll keep selling those in the money puts. And I sold it in the money on purpose to collect as much. I basically kind of wanted to be long the stock. I didn't want to collect change on it. I wanted to get some nice meat on that bone by selling that put. So I like the cruises. And Carnival, we'll pull up Carnival real quick. And Carnival is nowhere near to where RCL is, but this one is trending up as well. And if Mary, you watching this video in the replay, or if you hear now and you being silent, excellent pickup down here. If you guys are still holding it at the 10, I had my doubts because I was worried about bankruptcy, but man, if you got it down here at 8, basically a triple. So it's great, and you can see if it catches up to RCL, it's in an uptrend, right? So I think when these things trade down, maybe you can think about selling a put spread or even buying a stock or selling a naked put or whatever. The thing that's been bothering me about the cruise lines is they've been selling into the rallies, right? So they'll offer a secondary, shoot a tertiary, a quadrilateral. It's always a secondary, even though they keep doing it. They'll offer a secondary and sell more stock into it, and then it kind of goes down. It's like, but for the most part, it's been going up. They're doing it for survival. Okay, so just kind of expect that to happen. But in the long run, man, I think these guys are going to come back. The CDC is talking about a plan for them to come back. They got to do a practice cruise. I don't know how you practice a cruise with no people. And somehow they got to do a practice cruise and report anybody that catches COVID or blah, blah. But this time, I don't think there's going to be panic. We're not going to be like, oh, you're not coming back to America. I don't know what they're going to do if someone catches it, but there's not going to be panic like before. And, someone probably will have it. No, I don't know. Because I have a feeling that when these guys come back, I have a feeling you're going to have to be vaccinated, period. But so we'll see. It'll be very interesting. And when you do have that first successful cruise with nobody getting it, look out, man. These things are going to pop, man. It's going to be like fire. So I think that's a good thing about the cruises. I'm not super bullish about them, but I'm bullish that the fact that they've been going up, they're in an uptrend, So, and if you look at all the downturns since the initial downturn, make sure you guys can still see me. I got lines all over my chart here. Let me clear all that out. Since this initial downturn right here, for the most part, every pullback has been buyable, right? So just wait for another pullback. This coming off of one right now. So maybe this is still a time to get in, up 1.65 today, right? It's a leader in today's market. All of these, what do they call them? Comeback stocks, reopening, all these reopening stocks. So you can see we're coming off a pullback right now, and we might get another bounce. Now you see all of these bounces from that low, right? For every pullback, wow, that was 200%. Wow, incredible. 48%. By the way, I seen somebody doing this in their videos, and I was like, he must watch my videos because it's I think I'm the only one that does this. I measure drops. It really helps you plan out the next drop. I measure inclines or appreciation, and I was like, I saw somebody do it. I was like, you watch my videos. Yeah, you do. Anyway, 95% to the upside. That one, right? 60%. So you can see how significant it is. So let's bring it up to about, let's say 60%, right? That brings you to 37. So if this one climbs as like all of these other drops, right? You might get up here by $37. So it's something to think about, right? So Carnival Cruise Lines. We're going to talk about Peloton. Yeah. Look at that, bouncing off the low, kind of hung out there a little bit. I thought it was going to break, but one thing, let me get rid of some of these lines here. Like I said, if you guys have any questions, chime in and share. Hey, press the share button, then hit Twitter, and then go accept. Or share Facebook, accept. I love you. I love you anyway if you don't do it. Or you can just hit the thumbs up, either or. All right, so you can see it riding on that trend line, right? See that? And since it didn't bounce, I was worried. I was like, this is my favorite stock, and I think it might break. But I knew there was so much support here at the 100, so therefore it's starting to come up. And I'm starting to think of what is supposed to happen. And let me tell you something, this thing was supposed to break after hitting that support and just going sideways, kind of bear flag, right? Here's the pole, here's the flag. And it's, it's still in that area right there. You might still be, it's not safe yet to say it's not a bear flag, but let's just assume it's not. If it's supposed to go down and does it basically, it'll fly, it's going to go the other way and go the other way hard. So I like Peloton still up 6% today, and the NASDAQ is only up 0.33, right? So I like it. I like it a lot. I always like it. You know that. If you follow me, you know that. But I like it coming off this trend line. If you're a put seller, you can sell puts under here. So it's like safe now. Today sucks when you sell puts when it goes. A good day to sell puts, by the way, on a stock that you like. Because when you sell puts, you're bullish, right? You're expecting the stock to go up. But try to do them on days that it goes down, because that implied volatility is increased. Sell that put. You can even get a lower strike and then wait for it to go up. Now, when you sell them on a day like this, you're not going to get as much credit as you could have possibly got if it was going down. Also, if you're trying to buy calls right now, they're very expensive because it's up 6% today. So just the opposite. If you're looking to buy a call, maybe try not to do it on a day like up 6%, because there's premium. You could sell those calls, but there's the prices, they get inflated, right? It's kind of like if everybody goes to the store and they put Hershey chocolate bars on sale, right? I wouldn't say on sale, but everyone's scooping up the Hershey chocolate bars. They kind of raise the prices. They don't really do that, but you know what I mean. They could raise the prices. And then that's what you're buying, right? So you wait for the crowd to go away, and then maybe they lower the prices, and you can pick up a Hershey bar. But anyway, it kind of works like that. I know it's always $1. It doesn't matter if there's a lot of people in it. That was a bad example, but you get what I'm saying. You get what I'm saying. Just looking over there. All right, so you see this shoulder, you see that head. I kind of worry about another shoulder being formed and then it breaks, but it's kind of getting out of that head and shoulders pattern right here. I'm like, is this going to be a possible head and shoulders forming? Hopefully this thing can catch some traction and actually go up to 150. If it gets in this 140, 150 area, I'm going to look to sell calls again at this 200. All right, my position, I had a bunch of positions in Peloton. My position was the 150, 200. Okay, I bought the 150, sold the 200 on the calls a year out. And then when it dropped to 100, I bought those calls back for on the cheap, on the low. Now I'm long Peloton calls. So it was a beautiful trade. It's working out. Made money going up. Even though I lost money going down, the one side of the trade, I made a bunch of money on that. And if it goes back up, I can sell them again. And I'm just making money and up, down, up, down. So I'm rooting for you. Looking good so far. I'm rooting for you to go right back up to this top area. And then you could see the channel it would be in, right? Up, down, up, down. So maybe get up here somewhere. Now go ahead and sell those 200s and make that money. So that's Peloton. Here goes a stock because tech is back for now. Is ARK, man. I know a lot of you guys know about ARK. It was like the best ETF ever. I don't know about ever, but at least last year. And you see it bouncing off that trend line, right? It's up 1.85 today. And the reason why I'm pointing out these stocks, because if you're looking for something that's going to start to run it, this is it. These days still bouncing off the trend line. So if we can get what we expect maybe, and the reopen is real, man. Oh man. I think we're just at the beginning, especially if this especially if this rally, that's the word, continues, right? These stocks can go a lot higher than they actually are. I know they ran hard today for the last week for the most part, but they're not done yet. So let's look at stocks that it's coming off the bottom that could just get ready to get going. And you can look at ARK right here, right? You could sell puts below this. You know, if you're looking to get in it, you could just sell a naked put, or you could, buy a call spread. So you could do a lot of things here. This thing is just getting ready to go. So let's pull up the daily, right? And you can see the bounce, the H pattern. Look at that right there, high or low. That's always a good sign. That's my key sign, that high or low to get into something. I didn't have it pulled up then, but I got it pulled up now. And if you look at that, here's the trend line. It's broken, right? Broke that downtrend. So it has some room to run. The trend has changed. So let's see what this thing could do. So ARK, notice I go back to the weekly. I like weeklies. Yeah, I'm liking the ARK now. And it goes to say, because everything in ARK is like these disruptor kind of companies, you know what I mean? So NASDAQ, yeah, could be on fire for a while, so and this stock as well, up 1.86 today. And that's without Tesla participation for the most part. Look, Tesla's even down now. By the way, Tesla, I thought it was going to break. And they came out with those numbers, right? The sales. And it's funny because now I'm like, okay, what is Tesla a car company now? Okay, they sold 150 whatever thousand cars. So now we rallied like 5% yesterday. So I guess it's a car company. I don't know. But to me, I was like, does it really matter? Because we know they're going to sell more cars. Was that a shock? Oh, is it only rallying because they're selling a few more thousand cars? I thought it was all about the batteries and the EV and that whole trend, the leader in the sector. Well, anyway, it had a nasty reversal the other day, just before. Where's that day? I'm looking for the kids. Is this the day? Was it March 22nd? There's a reversal. Anyway, it had that nasty reversal. And I was like, oh my gosh, that they didn't want to buy it up. They sold it really quick, and I was worried. I was like, oh my Tesla, don't look. Here it is, right here. By the way, is the gap up, and boom, they just. And I'm like, oh, and look at this, sold it off, and so we got a little rally, and then we got the numbers, and everything is. But it's yeah, it's selling. I don't know it. Let's see if it could get above this 712 area and see what happens. To me, it's still in a channel. I'm liking it. I gotta admit I like it, but I don't know. I think I need more evidence. I need more evidence. See the stochastic sideways, the crossover, just now crossing to the downside right here on the moving averages. Even though they selling these rallies, and even yesterday it didn't hold like it could have. Let me see. Here's yesterday. See, it opened up here, and then it just kind of sold off. It went as low as it went as high as 708, and then as low as 681. I was like, So let's see. You got a gap here. Will it fill it? I actually think it will, but let's just see, man. I need a little more proof with Tesla. It just seems weak. The Nasdaq is up today. See, it's not leading. So Nasdaq's still up. Maybe it's changing as I'm talking. Yeah, Nasdaq is flat from 0.03. So Tesla is doesn't want to participate. It's down 0.5%. So yeah, a little more action on that. We need to see a little bit more. Mr. Jerry, what's up, man? Checking in from Baton Rouge. All right, I was there. I think there's a Walmart down there somewhere. I think I was in Baton Rouge. If it wasn't Walmart on a paper plan, I can't remember. There it is. So that's Tesla. I'm looking at my notes. I write down some stocks that I want to talk about. Like, what am I talking? But I need you guys' participation because I talk about the same stocks all the time. Why? Because they make me money. That's why. All right, so Booking. I've been talking about this stock for a while, and hopefully you guys is in it. It's sitting there right at the high, up 1% today, $24. It's right there. Let me pull up the monthly on this one. And it looks toppy when I pull up this monthly. I just still think it has more room to run. Yeah, I don't like that month. I got to be honest. I mean, it's all good on the monthly, but I don't like toppy stocks. Anyway, but here it is, and I notice it always sells right here, right? It always wants to sell when it reaches this 24.69, 24, basically 24.50 area. It may do it again, so I'm rooting for this thing to bust through, right? Just bust through that 250 to get to 2,500. Now, if we look at the options, let's look at the option chain on this. And over here, I want to go out to 2 years from now, all right? That's January 23. And this number right here is the implied volatility. This is the implied volatility of the option chain. And it's basically saying where this stock could go based on the implied volatility. And that's up 986 points from now. So if we go back to the chart, I'm just going to round it off to 1,000, okay? Right now we at 24.33. So in the next 2 years, we could be talking about this, and I'm talking about 34.33. And that's why I'm kind of bullish on the stock, especially with, I know it's peaking out. Travel is really just getting started. And let me tell you something. I just took a trip to North Carolina. All the rest area, you probably seen it, JR. Rest area is jam-packed. Cars can't even get in there. Everything that's open, long lines, just lines, and it's not many things open. But the things that are open, like that you could do, and I know it's kind of spring breakish. It's just, I mean, you could just see the people dying to get out. And you heard about the movie. Well, what was the movie that Godzilla versus King Kong or something like that? With the theater chain, just. I forgot, unbelievable numbers for the situation. I think they sold 73 million, if I remember they're down 5% today. I think it was 73 million if I remember what they reported. Look at the daily. So this closed at 936 and it reached a high of 11. Yeah, so it kind of rallied, selling it off. So you can see, I don't know, I'm just seeing that pent up demand. I'm seeing it come true. You're hearing about the airlines, how was it Delta got rid of the middle seat. They opened it up even though they want to keep it closed a little longer. So people wanting to get out there and travel. I'm liking the booking. I'm still liking these kind of stocks, you know. So we talked about the cruise, we talked about booking. Might as well bring in Expedia, and I think Airbnb. And the one thing I noticed about these stocks, they rip at different. They don't all rip together. So like today it could be Expedia, tomorrow it could be Booking, then the next day it could be Airbnb. Those are for the most part the three that I play as far as making booking trips and stuff like that. I think Booking, by the way, is giving you a free $50 if you make a trip. And a lot of these trips, you could just book it. You don't even need money. You can cancel it even. Get that $50 credit. So I got to look into that. But anyway, here's Expedia. It's up 0.10. Let's look at Airbnb today. And I don't know what's different. Actually, it was up more today. It's up $1.63. 1.63%. I think it was up like 5% earlier, if I'm not mistaken. Pull up the hourly. No, let's pull up the 5-minute. Yeah. Look, so they kind of selling. It was way up here today. I was like, whoa. So it done sold off another $4 from the high, but I think these stocks are still exciting. Remember, I have that long put spread. I sold way down here. I sold the 150, 130 or something for 2,000 and collected 2,000. Well, I sold it and collected $2,000. So, and the most I could lose is it was almost like 50-50. I'm either going to make it or lose it. And so far I'm making it. Just stay way out. You can stay here, go higher. It's all good. I'm going to double my money. And these are the trades that I like. So you might even be able to do a similar trade. If it can kind of you can see this area. Here, let me make it clear from you. And I know this is probably over my head. Meaning, let me see. Now you could see looking at my picture. See this area right here. See this area right here. Well, I think there will be eventually an area right here. You can see the steps. So now that we're at the lower end of this range, you might be able to sell something similar. You know, like that's a year out or something. Maybe 160, 140 or something like that. Expecting it to kind of keep going up and to the right, right? So that's what I did down here. I think that's going to be a good trade. I'm feeling comfortable with it. It almost looks like you could do it again for this next section, right? It's holding this area pretty well. And we're going to expect it to eventually blow through these highs around 220 and be up in this next range and kind of chop around up here, right? So that's my thinking about Airbnb. Yeah, I think they reported a quarter. Can't remember what happened though. But they're in the middle of the range right now. There it is. Draw this thing. So it's, now when we get to the lower end of that range, you could probably pop that put spread off and make that money. Just got to be patient. You could set it up, make 100% on your money in a year though, right? And it's like, just imagine every time you could $100, $1,000, and you double it every year. Every time you get a nice chunk of change, you just double it every year. You know how much money you'll have in 10 years? A lot. I'm saying 7 figures plus. All right, so there is Airbnb. Let's look at the VIX, y'all. I should have started with this because I've been predicting this the whole time, and it finally is coming to fruition. I've just been starting to say that word lately. I don't know. Never really said it too much in my life. Anyway, so here it is. One thing I noticed about and this is nothing new, but you can see this is the VIX. It goes all the way down to 2001. But this area is just like, wow, what? I mean, you can see it rides in this area, right? Below 20 for the most part. And look at this long area where we did not breach. So now I'm going to come back to the daily. And you can see we're finally breaching. I already got all the lines drawn highlighted, showing you these lower lows here, showing you the downtrend with the arrow. Maybe I'll go back to the weekly. With the arrow, when we're going down, and if we go down and when we break the 20, that we're going to be rallying, right? If we break 20, stocks are going up. So finally, we broke 20. What are we at now? 1822? Almost the low. What is we down? It's up today, 0.31 cent, 31 cents, 1.73. But the low, 1735. Oh, no, hold on. Yesterday, well, last week, 1729. Yeah, see, I got to make videos because I should have been talking about this last week. I wanted to get on and be like, wow, man, look at the VIX. And we've been rallying, right? So we're going to continue to rally until we normalize, right? So normal, what's normal? 13, 12. For this, we'll even quarter 14. All right, so 14, 13, 12. When we get into there, and I'm guessing, and I had said in the video in January that I think May is when we don't do good. But I don't know because there's so much stimulus out there. I just think this is a different period. But looking at the charts, I'm like, well, May, maybe we'll spike. So I'm thinking that we rally for earnings season. A lot of good numbers will come out, and we rally. And then when there's nothing to talk about, and also the selling may go away. By the way, it's end of May, not beginning of May. Okay, that's important. And we'll have all of that and the whole just, stocks going down in the summer. Lately, though, it hasn't been happening. Stocks have been going up. But that's when I think we'll go down. And I think it'd be safe to do some iron condors, sell some calls, spreads out of the money because I think stocks will probably go down. Yeah. It's those iron condors in this market for the last year, since we've just been going straight up for the most part. And I haven't been working on that call side. I mean, it's hard to sell, and I like iron condors. That's why I'm talking about it. It's hard to sell. It's hard to sell the iron condors in that call side in a bull market. Mikito. Let me see. Amazon has no. Hold on a minute. I got to get closer to the screen. Amazon has no legs. It looks like NASDAQ without positive range. Can you comment? Yep, I sure can. AO Beauty. In the house. A fan of Jewelry Box. Let's look at Amazon. By the way, I just put a trade on Amazon. Long term, 2 years out. AMZN. Hopefully he's still there. I actually like it, and I know it's been a little reversal today. I know it's been going sideways, and I like that. It's been doing nothing for the most part for the last year. And we're looking now. If you're into a short-term trading, well, we'll call it. Basically, if you're looking for something to happen now or within the next. Let's say within the next month. I don't know. It's been going sideways for the last, 6 months since July. Had that run. It was one of the first ones just to kind of reach the top of that flagpole or whatever. I mean, Amazon just left. You blinked. It left 2,000, went up to 3,500. It's this unbelievable run, but sideways. And I like sideways action. This is my first time me saying your name, so thanks for watching. Hopefully you subscribe and hit the bell and do all that stuff. But it's not giving it back. And I think that's more important than not, right? So it's going sideways. Now watch the magic I show you here when I go to the monthly, right? Look at that huge bull flag that's being formed, right? And you can this was more of an angle, but you got that, right? Look how this thing is trading. Here's the one. We got a steeper one thanks to COVID, sideways. I think. And by the way, this last one, look at the length of that sideways action. That's about almost 2 years. Here's a year, half a year, almost 2 years. It went sideways. So now we almost got a year. Not saying it's going to go 2 years, but as long as we don't give it back, and then when it breaks out of this range, we're going to have another 1,000 or so points to the upside. That's what bull flags are, by the way. So if you look at the flagpole, right, and then you got the flag, basically when we break out, it'll be the size of this flagpole. So, from here to here is 1,300 points. So maybe from here to here will be another 13, which will put it right about there, about $4,700 a share. All right, so we have 32, 47. That's nice. Let's go to the option chain and look at some of these options. And you can see that I got a position on right here. See the leaps, 2 years out. Not worried about it. Here's the implied volatility. And they saying basically with the implied volatility, the way it's priced, that it'll go up 1,000 points from now in 2 years, right? Up or down, by the way. Okay, I got to make that clear. So it's going to move 1,000 points, or it can move 1,000 points from today's action. So right now we at 32. 1,000 points puts it at 42, right? And I had measured, what did I just measure? I said 1,300 from here. Yeah, so if the options are measuring 1,000, I did a quick bull flag analysis and came up with 13. So there it is. I'm thinking 45, 47. They're thinking 43, 42, 43. Right, so that's my analysis. I think it's just be patient with it, and it's eventually going to break out of this pattern. Now, you don't have to trade this right away. You can say, you know what? All right, show me Amazon and just wait and just chill and wait. And when you see it all-time highs, which is right here, that means it's getting ready to go. Okay, it's going. It's going. Now, just remember on the breakout, you can always have that pullback, right? Get faked out on a breakout. But it's going to be on its way. Same thing happened right here. And this one got me as well. And I'm going to show you. See that right there? See that breakout? And look what happened. But you know what? Yeah, okay, that was COVID. COVID did that, by the way. So you see that? It was on its way, came back down, and then off to the races. So that's what you want to look out for on the breakout. Just remember that it could kind of check, right? Make it look like a fake breakout, but then it's going. So, but at that point, put on a long-term type trade. You don't have to, buy that 3-week call that's like doing theta burn of $130 a day or something like that. Do a long-term call spread, so I am playing that rise. I'm playing that rise so if I go back to the trade here, and you can see I'm way down here, and I bought this call spread right here, the 4,200, 4,250. It's a small trade. I bought 2 of those. Oh, look, somebody else did. They bought some too, because I was the only one. Somebody must have bought or sold, I don't know, the 4,200. So I'm out there. I'm 2,000 points away. I'm a little further than the expectation, but as long as this thing is going up, that spread is going to make some money. It's leap. It's 2 years from now. Okay, 2 years. So keep that in mind. So what do you think? Mikado, what do you think of that analyst? So what did you say? The legs are gonna come. They're gonna come, and then once it breaks out and they say some positive things or whatever makes it break out, you're gonna see everybody jumping in on the bandwagon. That's what you're just gonna see it, and it's gonna be like, oh, Amazon's the greatest thing, almost like it's a brand new company and no one ever heard of it before. Case analysis, Facebook. Right? So look at Facebook and what's going on here. And I thought Facebook was just I couldn't believe when it reached right here. Just what is that? January 111, babe. I'm like, 240? Really? What's the low here? 244. I was like, oh my gosh, what is going on with Facebook? Right? And then all of a sudden now it's at all-time high. So it looked like this was no action, and then man, I should have been scooping up that fade. The reason why I faded away from this 240, meaning didn't trade it, is because everything was going, all the other stocks were at the top end of the range. I'm like, man, Facebook, what? So it just was, the relative strength was terrible. I was just thinking this thing's gonna break, and they had the Capitol Hill hearings, scheduled out further out. So I was like, oh man, this doesn't look good. That whole Section 230 thing. By the way, there's something still there. You know what I mean? So I like the highs. I like everything of it. But, the government can make some regulations just totally change the way Facebook is, So you got to be cautious of that, by the way. And I think that's what traders were thinking on this downtrend. But somehow they brought it back up. It didn't take long at all. What is this? From here to there? 84 days, 2 months, 2.5 months, just boom, new high. Could have been scooping up that. And from here all the way down, it was always sell-offs. The stock couldn't even hold any gains it would make for the day. It was just like, you look at all these stems, right? What do I call them? These wicks. I like to call them stems. Look at all these wicks. Meaning it would go up and they just selling it off, right? All that selling pressure above here, right? Here, indecision on that candle. It's like a doji, big ass doji. And then now you're just getting solid bars of, where they're just trending up. It's opening and closing at the high of the day or high of the week. Right? So some selling is coming in now, but it's still making new highs. So anyway, we're out of the range. Let's go to the monthly. Right, so you got the monthly, and look at that breakout. And I think this is what you're gonna see with Amazon, right? See, I just got the flag highlight, but there's your bull flag, and it's starting to break out. So, yeah, maybe this quarter is gonna do it. Facebook shops is shops with the deal with Shopify, and now that the economy's coming back, and there's this. I mean, Facebook is high growth. Doesn't matter what happens. The users are not going away, and the what's that word I'm looking for? The advertisers are not. I mean, this is where their eyeballs are. And it's funny that Facebook recently said, remember, because it started downtrending when it's like Apple's getting ready to, you can opt out of them tracking you. Also, my phone is going berserk. You can opt out of them tracking you. What's going on? I just bought some Rockwell and some XNTK. By the way, I got some Robinhood trades going on where I buy the same stock every day. $5. What was I gonna say? Facebook. What was I talking about? Talking about Facebook, the growth. I forgot, man. I'm gonna have to rewind the video. You said you don't have the patience to hold options that long. Man, just make the spreads. I think you did that on Peloton, didn't you? Just make it spreads. Think of it just as stocks. You know what I mean? Just says, hey, I bought some stock in Amazon. Forget about it, man. Right? Look, Amazon, Google, Facebook, Tesla, Nvidia, Peloton, whatever. All of them stocks. Imagine if you just bought them early and just put them in a drawer and walked away. Right? That's how I look at it. Right? They all work. Even the Qs, the SMH, AMD, all of these things is working now. I know they all don't work, but the proven ones work because they've been showing you growth forever. And that's what I'm saying. They're not abandoning this thing, because that's what I was talking about with Facebook. The customers, they're there. Oh, that's what I was saying. So, yeah, Apple said you can opt out, right? And then now, just a couple of weeks ago, Zuckerberg is like, oh, well, you know what? This might be better for us. And that's when the stock started just taking off and just going nonstop. Yeah, this might even be better for us. I'm kind of like, I don't know how. Is he just saying that? The eyeballs are still going to be there. They just can't track as with precision as they was able to do now. If this happens, this whole opting out, right? So we'll see. The thing with the new phone, are you going to be opted out, and basically, are you going to have to opt in and you automatically opted out, or you're in and you have to opt out, right? So is it opt in to be tracked, or is it opt out to be tracked, or whatever? You know what I'm saying? I don't know which one it is, but it just won't be, I guess, as precision. But here's the thing, and this is what I was confused. If you're an active Facebooker, you're liking, you're unliking, you're following this group, Facebook doesn't need you to know what's going on with your phone. You're telling it what you like. You're telling it what you don't like just by following certain people and being involved in certain groups. So maybe that's what Zuckerberg is thinking about. Like, hey, you know what? That it's not even going to really matter because we're telling Facebook what we like without any phones doing it. Yeah, I like that. I like that. Like. Follow this group. Oh, I'm going to follow the hair unanimous group. Oh, I like hair. You know what I mean? It just knows by the people you follow and by the groups you follow and what you like, how long you spend reading something. It just knows that stuff. And therefore they can still track, and that's where all the money's going, and it's cheap. And you could focus, you could pinpoint exactly where you want your money to go. And I don't think that could be beat. It's just Google does it, by the way, but I don't know. Yeah, I don't know. Google's good too. I mean, you could do it on YouTube. Google knows exactly what you're doing. And when you set up a Google ad, you can say exactly the audience you're trying to target. I personally think Google does it better. I tried some ads on both of them. I don't like the fact that Facebook, they count your ad being read. Is it 3 seconds? Maybe Babes can answer. 3 seconds, 2 seconds, and it's red. And I think YouTube or Google is 5 seconds. So you get a little bit longer time. I like the analytics on your ads better than Facebook. And it's been a while since I had advertisements going on that. But look at that. I got the monthly out, and this is what you want to use when you're looking long term. Mr. Jarrett, you definitely got to learn that patience. Take a portion of your portfolio. I'm sure you already got it like that already, but maybe a bigger portion, and go think longer term. Look at that chart, right? Look at that Facebook chart. Got some volatility. This thing didn't get introduced to volatility until 2018. It's a little bit when it opened up, and now we're going sideways. The stock is back in. Notice how it tracked these averages for the most part the whole time. We're back on average, and now maybe we can go up. So it looks good. It looks good here. I do worry about government action, but I don't know. I think they're going to find a way. I think Facebook is going to find a way and start to trend higher. So this thing looks buyable maybe on any pullback. This is really bullish right there. It's a bullish chart on the monthly. Remember, so it's not going to just keep going higher tomorrow or whatever. This is the monthly chart, right? So if you were to draw, and you can see, look at the moving averages I got here. And I know you have all this volatility, but you see that moving average, and look at the angle of it. This is what we're going to look at. That angle is 10 degrees. That's right. I can measure the angles. 10 degrees there. And then you could see it steeping right here, even with all the volatility. Right now it's 20 degrees. Now, people, it's getting in gear. It's getting in gear. So I'm going to draw this next trend line, and I'm going to draw it about 20 degrees right there. Now, if anybody's talking degrees on your videos, you are following me because I'm the only one that does this. Anyway, I just drew a line 20 degrees, right? So where could it possibly be if everything is exactly the same as it is today, or has it been for the last 8 months or so? In the middle, June 22, $330. Here's a trade. How about buying the 300-330 call spread that expires a year from now? Could be something there. And then what you can do to pay for it is sell a put spread, right, to help pay for that. Oh, yeah, I wanted to show you a trade I did on, what's the name of the damn stock? It's a stock no one's talking about but me. Callaway Golf. I'm going to tell you why. I just bought some Callaway Golf. What? Golf? Yeah, Callaway. I'll show you what. You said you got to build your account back up. I bought oh, nice, man. Bought a truck and trailer. Ain't nothing wrong with that. I mean, freight's booming too. What do you hear these things with there's no containers and Man, you guys, if you work in that spot board, what is it? The spot market, and I don't know. I imagine the loads are just on fire, man. I'd be thinking, I'm like, man, I wish I can get back in that. But that's nice, man. That's nice. But hey, remember I showed you how to put on the trades. I showed you how to put on these. Amazon is a little hard because it's a pricey stock, and when you go out a year from now or 2 years from now, these options are like 100 points wide. Let's check out something like Facebook and go out. And these are out of the money I'm looking at. See, these are 10-point wide. All right, let's look at this 315, 320. Okay, I'm 2 years out, and I want to buy one of those. Right, $200. So when you get $200, right, it says 205. Let's say 210. Right, I should be able to get that filled for 210. I think. We're going to go 210 for demonstration purposes, right? So it's a $5 point spread, $5 wide spread. I'm going to buy it for two. That means I can make $500, right? I'm going to make $500, but I bought it for 210. So you got to minus that 210, right? So that brings me out to $290 is the most I can make. Did I figure that out right? Yeah, 290. I can analyze that, bring it over here, get rid of these. And that's right, 290. So the most I can make is 290. The most I can lose is 210. And I'm going to double my money, right? Because I put 210 and I'm actually going to make a little bit more than that as long as Facebook is above 320. What is that? In the next 2 years. I think that's going to happen. That's a good chance, a real good chance that's going to happen. But you just got to be patient. So kind of think of it as a bank account, Mr. JRH. Like I got the $200, got this extra 200. I'm going to invest it. Let me go ahead and buy that 305, 310 call spread. It expires in 2 years, 210, and just forget about it. Forget about it. You don't even got to worry about it exercising. It can if Facebook starts to rocket, but you got, this leg exercises, you got the other leg. It's just, and if let's say they both go to expiration, it'll just work itself out, right? They'll expire. You'll wake up Monday morning with money, and there'll be no shares. It'll just kind of work itself out. But that's it. That's all you gotta work. That's it, man. That's the trades I put on. I really like those set it and forget it ones. And you could see, I know you was doing an AM. I see you on Twitter. You're doing some fast money type trades, and man, that's stressful. It's stressful. I'm like, I can't trade like that. Sometimes I do. If I'm feeling a little, like say Facebook going into earnings, it always runs into earnings. But to tell you the truth, I think I might have missed it. I think that was the run. It's coming up here probably in a couple weeks. It might run a little further. But that's a trade I like to put on. But I don't know. I have to trade longer term, so I'm always in the leaps and whatnot. And it depends. All right, so Walmart. Let's talk about Walmart. Because I gave y'all this one. Remember that sell-off? And I didn't know why. I mean, Walmart was buying its stock back. It was doing a buyback, and I thought it was a good earnings report. I guess nobody else did. So I didn't scoop up these. I think I put in. I got the 150, 160 call spread on. I got a bunch of option trades on them. I can't even describe them. But for me to win them all, I need this thing to be above 160. I think by next year. But I got a lot of sold put spreads down here. I got a whole bunch of things going on in Walmart. I can't even list them. It's one of my biggest positions, but they're all small little positions. But it could be one of my biggest positions because I got so many positions because I was trading it for so long. But I wasn't. It's coming right back from that drop. I still think it's early here. I didn't see anything that's going to make them say earnings suck this coming, especially with the stimulus. The money from the stimulus is going to Amazon, Walmart, Target, Costco. That's where most of the money is going, and maybe some Robinhood. So they're getting their share. They're getting their fair share. And maybe that's what's bringing it back because it looks like, now that I think about it, that bounce is right there when the stimulus got released. So All aboard, right? So I like Walmart. Let's look at the monthly. Yeah, nice little dip into the range as far as the um, moving average, right? If you look at the buy points, I'm gonna just circle every single time the thing hit a low. And if you notice, every single time it was on the moving average, like now. Right? So that's a square there. Walmart's very volatile. It's up and down, up and down, up and down. But we do know to buy it when it reaches this moving average. And that's where it is right now, heading higher. So I think Walmart goes higher. Let's talk about a stock no one's talking about. Callaway Golf. Now, the reason why I looked at Callaway Golf is, y'all know I love lines. What's some of the stocks that have lines? Starbucks. Doesn't matter. I was talking to my daughter. I'm like, we got into a Starbucks line. I was like, let's go in. This line was too long for me. Let's go inside. It's like, but if you think about Starbucks, you're in line, right? You're like, you can't just be like, damn, this line's long. Hey, there's another Starbucks like a couple miles down. Let's go to that one. You know that line's long too. Doesn't matter where you go. The line's wrapped around the building in a drive-thru. I never seen so many people wait for a cup of coffee. I love McDonald's coffee personally. I can get it really quick. But people just wait in that line for a damn cup of coffee and want to overpay for it as well. You got to buy Starbucks. I'm in Starbucks call spreads on my other account. I never talk about it because it's almost like I'm just in it. I always got called. I got the 105, 130 on. I think I got two of those. And I'm just riding that Starbucks, SBUX, right? Another one is Nike. I bought into Nike. And by the way, Nike's just taking a pause here. I bought into Nike when I was looking for a specific share of shoes. And all the lines was long. I was like, I can't even get it. It was mid-COVID, couldn't even get into the store. Store's line was wrapped around. And all the other stores were damn near nobody in them. Everyone was going to the mall just for Nike. I'm like, oh my gosh, gotta buy Nike. Shake Shack is kind of another business like that. Long lines there, if depending on the location. So we went out to fix my screen here real quick. There we go. There we go. Trades, subscribe, comment. Anyway, so we went out to, was hanging out with my daughter, and we went to Top Golf. You know, anybody familiar with Top Golf? There's only like 58 locations in the country. So let me see something. Top Golf. Basically, it's a driving range and platforms, and here it is. And let me see how it works. Is that a video? I'll bring you back to the desktop. By the way, a lot of youngins are there as well. So you plan your visit. I'm trying to look at the big thing. Anyway, there it is. How it works. So anyway, it's just a big ass driving range that you shoot off a deck and you can hit balls and it can go into certain holes. And you can win prizes, you can drink, you could eat, you have parties. And so they have each one of the cubicles that you can golf from, they have, each one of them has there's like 100 of them for the most part. I'm rounding it off, maybe 99, 98, right around 100. And each cubicle goes for $37 an hour. Okay, so approximately like $37 an hour to go ahead and hit the balls and do all of that, right? So 100 cubicles, all full, $37 an hour, $3,700 an hour. I guess this place can pull in, not counting drinks and food and all of that other stuff. So that's just simple math. All right, so no big deal. I'm not thinking about it as a stock yet. So I'm like, all right, let's go play. Oh, sorry, sir, we're sold out. Okay, how do I make what do I got to do? Make a reservation? So they like, yeah, you can just go online and make a reservation. So I went online and I'm like, all right, let me make a reservation. Now it's Saturday about 2 o'clock in the afternoon. And I made the reservation. I'm looking to play. I want to play that night. And then they was like sold out for the day. So I'm like, all right, we come back tomorrow and play. It's Easter. And I'm like, people's gonna be at church. Come back about 10 o'clock, 11 o'clock. When I clicked on the play reservation to play, I just want to, when's your next booth out of your 100, right? When's the next booth? I couldn't golf till Monday at 1:30. They was sold out from Saturday, Sunday, all through Easter. And Monday afternoon, I was going to finally be able to get a booth and give these guys $37 an hour. So I'm like, ching, ching, ching. I'm just start thinking, I'm like, who owns Top Golf? Who owns it? It winds up being Callaway Golf, which is funny because I'm just now into it. And these guys they just finished the deal. Like it's not in the here, let me pull it up right here, I guess. My FinViz. Because they just finished the acquisition. Basically, it's done. It's in the books, done. A couple of weeks ago. All right. You know how it takes like a year or whatever. So the next earnings in the earnings throughout, let's pull up the monthly on here. It's going to include Callaway's earnings. So I'm really excited about that. And I did some research on it. And these guys, serious growth. They're going to be able to pull in these kids to help them learn golf and wanting to be golfers and maybe buy Callaway gear and golf balls. And they also got the technology with little chips in these golf balls that when you watch Tiger Woods hit a ball, you see how the graphics on TV and they know where the ball is. This is all computer balls. I don't know. It's like really deep. And they own the technology for that and they licensing it to other driving ranges and all. It's crazy. There's some real money to be made here. Anyway, so let's go back to this Top Golf thing. Let's go to, and this is where I was. I was in Charlotte. Let's find Charlotte. I was in North Carolina. Let's see what you guys saying. So it's like Chuck E. Cheese for golfers. Yeah. And like I said, not serious. If you're a serious golfer, yeah, it might be nice to hit some balls out. But it seemed like a kid joint, man. It was like, not, when I say kids, I don't mean like 10-year-olds. I mean like 18 to 25. Like that, like 17 to 23 in that area. So I was the old man in the joint. Let's put it that way. Oh man, what was that? North Carolina? How come I don't see it? Oh yeah. So there's 58 of them. I think they're gonna build 20 this year. So whatever. Tuesday's pricing. Yeah, and $23 an hour. Look at that. It was 47. So let's make estimated wait time 2 hours. So even here right now, it's Monday. I still got to wait 2 hours to even get a booth here. Let's go. That's right now. At least I don't have to wait 2 days. Let's try, I don't know. Is that Cincinnati? Cincinnati, Westchester. I guess because I'm close to that. 15 minutes. So maybe this North Carolina has I can golf in 15 minutes. They're $22 an hour. I don't know why they're giving you a discount. Oh, it's half price Tuesday. Okay. All gameplay is half price, no coupon. That's nice. So I know to do this on a Tuesday, and I guess it's half price Tuesday because not many people golf on Tuesday. But you can see the regular price after 5 p.m. is $45 an hour. So it's very expensive, and I like expensive things, and I like things you got to wait for. So I invite you to look into Callaway Golf and with Top Golf. I'm guessing they still have incredible earnings. I could pull up Yahoo, and now you could now it's going to be propelled with Top Golf. And you could see the revenue, right? From 2017, I'm like looking at here, right? They made 105 billion. This is not including Top Golf, okay? Then this is just Callaway, 124 billion the next year, 107 billion the next year. So it looks like they increase in revenue almost by 25% or something like that. And then you can see the the net income, right? The earnings, and then here's COVID, and they still brought on the revenue. Look at the revenue, and of course, COVID. Everybody struggled in 2020. Everybody struggled, but now bring in Topgolf. All right, starting 2 weeks ago. All right, so I'm expecting those earnings to kind of accelerate into that. So I'm liking that, and we'll see what happens. I don't do a lot of my fundamental analyst for the most part is long line to get in, and it was going to cost me a fortune to hit some golf balls when I could have went down to the outdoor one, and you get the bucket of balls, and you just and the bucket of balls is like $10. Well, they're going to give you unlimited balls, but you're going to pay $37 for them. And I don't know how many balls you can hit in an hour. I know I'll be swinging away because I'm like, I'm paying $37 an hour. Anyway, so that's what, so let me show you the trade I put on. So if you come to the analyze here and you look at ELY. All right, so basically, I'm looking at the chart. We're sitting there right around all-time highs. And you can see the, look at these wicks, right? I know I call them wicks and I should call them, stems. I mean, a lot of selling pressure up there. I'm thinking this thing is going to make all-time highs. It's going to break through. Basically, it's going to start going up. That's the monthly. Look at the weekly, right? You can see that, did I erase my trend lines? I'm going to draw the trend line. See that? Right, maybe he's even making a secondary trend line. Got a higher low here. You can see that bounce, right? And we're going to focus on that one, right? Just like everything else, just like ARK, right? Just like Peloton, bouncing off the low here. So I'm thinking maybe we can go up to an all-time high before next year. So here's my trade. So I bought this. We're going to do it one at a time. So I bought these call spreads, right? I bought the 27.35 right here, and I paid $2.65 for them. So basically, one of them, if I just did one, basically I can make $535 on my money if this thing reaches $35 by January. That's nice, right? That basically doubled my money. So I bought 5 of those. So basically, I risked $1,325. And if it reaches 35, by the way, this little gray area, that's what the implied volatility says it can move to. They're saying it can move to about 40 and a half. But I'm just hoping it goes to 35. All right, so if it reaches here, I'm going to turn my $1,325 into $2,675. Basically, I'm going to double my money. My break even for that trade, for me to, not lose any money, I needed to reach 29.65. All right, so right now it's trading at 27.86. I needed to basically go up another $2, right? $2 will do it. But on trades like this where it's kind of long term, and I don't want to, I have theta burn, by the way, and I'm losing about, right now it's like 17 cents a day, but it's still losing money. To make that cheaper, I decided to sell a put spread, right, and collect some money. So, and also fix that theta burn and also lower my break even, almost like a synthetic stock, right? Just like owning the stock. So we'll analyze this one separately. So I sold 7 27.25s. I sold some put spreads. So right now the stock is trading at 27.87. So I basically said, you know what, it's going to stay above 27 for the rest of the year. And I sold puts under that. And then to protect myself, I bought the 25s. So I sold the 27s and bought the 25s. Way out the same expiration. So you can see as long as it stays above 27, that's where it flattens out this curve, it's going to make me $679. Basically, okay, to do that, the margin I needed was $721. So I took $721. That's the margin. That's the risk. Okay, if all goes well, all goes to shit, I'm going to lose $721. And as long as it stays above 27 for the next year, well, for almost a year, I'll make $679. I'll basically double my money. Let's just call it a double. Now, when you put, so basically, let me do some writing here because I don't think it's going to show me. So basically, when I add the two trades together, the 1325, right? So remember, the calls cost me 1325, and then if I sold put spreads against it, that's 679 credit I took in, right? So 1325 minus 679. So the trade cost me $646. That's it. Now, when you add both of these together, if this thing could reach 35 by January, I'm going to make $3,354 on it. I'm going to make that. If it don't, if it doesn't reach, wait a minute, do I got to make sure I got my right days? Okay, if it doesn't reach there, if it basically, if all goes to shit, I'm going to lose $2,406. All right, that's the $1,325 on the calls, and also the $679. And that's if it goes at 25. Let's say if it goes to 26, I'm going to lose $1,300. So 25 is max loss. My break even now, since is $28.29 for the whole trade. And right now it's trading at $27.82. Right? My break even is $28.30. So another 50 cents, and it's a good trade. See, it's like I own the stock, and that's what I'm saying. Like, so if you own the stock, if it goes up, you make money. If it goes down, you start losing money. I just need this thing to go up 50 cents, and this trade is a good trade. I don't need it to go up to $35. That's max gains right there. You know, so if a year from now it's 32, I'm going to make $1,800 on the trade. That's a year in January. $32 would bring me in $1,800. And I think it could do that. Because I think now that Topgolf earnings is going to be included with Callaway, which was Topgolf was a serious earnings driver. That's why Callaway bought it, and I think it's going to happen. You know what I'm saying? So Callaway was doing all fine by itself. Now what sucks, I guess, Callaway, Tiger Woods out. He's always good for the golf industry. Callaway sells apparel and equipment, right? So I forget who's the big sponsor for Callaway. One of them golfers. But anyway, now that you're bringing in new people, because 28 million people visited Topgolf last year. This is how much they get in visitors. And there's only 50 locations, 58. So with that starting to grow, more people introduced to golf, more people buying clothing, more people buying the balls, and you see it's like its own little engine. So I like it really long term. This is just a year trade, but I think this could be that long term stock that no one's really talking about. You know what I mean? So let's see what happens. Tell me if you like my trade, or if you like Callaway, if you like Topgolf. Joseph H., you said McDonald's in your area has slow service. Can't stand them anymore. You're talking about McDonald's? I used to own McDonald's. I sold my McDonald's. And it was only because I actually hated to sell it, because everything else was going just ripping. I had to just get out of McDonald's. But I actually like McDonald's as a core portfolio. I like it. I just like, if you're gonna make a portfolio just to hold forever, I think McDonald's has to be in there. I mean, fast food. It's funny because they don't even make the best food, but they're quick, they're consistent, right? If you get a McDouble from this McDonald's versus that McDonald's, it's gonna taste exactly the same. That's what I mean by consistent. Or coffee from this one versus that one, it's exact. I don't get that at any other franchise. Things be different. Right, so I think that I like their consistency. No one beats them speed in the drive-through, and they even working on that speed. They bought some company in overseas in Germany, I think. They still working on that speed, right? So I like McDonald's. You look at that monthly, by the way. This is a breakout right there. So you might not like the slow service, but the stock is breaking out, and McDonald's is basically inches away from an all-time high. That high was 231.91. It's 30 cents from an all-time high. So you gotta like that breakout, and you gotta like it. The thing pays a dividend. So your restaurant that's close to pays 2.23%. Your restaurant's close to you, but just think of the thousands of restaurants they own, and I'm next to the shittiest restaurant in Indiana, but I still like McDonald's. And I don't like it like that. I mean, I'm like, we go to McDonald's, we're like, oh man, what do we want? Yeah, let me get a quarter pounder with cheese. We just kind of filling our stomachs up. I mean, no one's excited about going to McDonald's, but they're everywhere and they quick. I really think they speed is what keeps them on top. Because when you have a lunch break at work and it's 30 minutes, 45 minutes, you go to KFC, you go to Wendy's, you go to Taco, you're going to blow your whole lunch break and be late for work. You go to McDonald's, you're going to be in and out, and you're going to be back at work and still have time to eat it. And I think once someone starts beating McDonald's in the drive-thru and they worldwide kind of like McDonald's, then I think McDonald's has problems. But these guys, that's my thing and my personal reasons why I think McDonald's is always a winner is that drive-through speed and the consistency with the food that's throughout the chain, which I just don't get it. I mean, you go to Taco Bell and get 4 soft tacos. You go to the next one, and that one might be cold. You go to the next one, they don't know how to roll a taco. You go to the next one, the tacos are burnt, or you can break them like a piece of bacon. So it's like, you see what I'm saying? So, but McDonald's, you don't really get that. Occasionally, you'll get some bad food here and there, but for the most part, it's just consistency. All right, that's my little take on McDonald's. Little Dre Trades take. That's it, y'all. That's all I got to talk about. What do y'all want to talk about? And hopefully I answered everyone's questions. Hopefully you enjoyed this. Like it, share it, subscribe, bell. What else you got to do? All that stuff. Comment. I'm going to get ready to end the video, though. So I'm liking the Qs. Let's sum it up. I like the Qs. I like them to go higher. Oh, we see what happened to the VIX. It's breaking new lows. I think it does go down to that 13 level. And I think that's when we got to start considering buying puts, maybe selling calls above the market, because generally when it reaches that area, it just doesn't stay down there. It could actually, I think, what did we hit? 9.8, I think was the low, but then it'll bounce up. So, and if we got to go lower on the VIX to normalize, that means the market goes higher, right? We need to normalize the VIX, which is 14, 12, 13, 14 in there. But since we're at 18, normalizing means it goes down. That means stocks got to go up, right? So that's my whole thing. I've been saying that call for the last 4 months, 5-6 months or so. Here is the 10-year, right? Because the NASDAQ has been trading basically off the 10-year. Pull up the 4-hour. You said you liked and commented, you already sub. Of course, Jewelry Box. You said they all offer inconsistent service. Yeah, but I think McDonald's has the most consistency. Now, nothing is 100%. I'm not talking 100% anything. But if I were to compare them all, I think McDonald's has the most consistency versus any other restaurant. Me and Babes talk about it all the time. But yeah, nothing's 100%, all right? I don't know what the percentage is. It could be McDonald's is 70% consistent, but that means the others are 65, 60, 50, 49 and all that. And I'm just saying they're the best compared to other restaurants, so that's my opinion. I didn't read that anywhere. That's just my opinion. And us being truck drivers, Mr. JRH, I think you could probably agree. And that's another, we go to McDonald's, be in and out, and get back on the road. Wendy's, gotta wait. Killing that clock time. Subway, depends. Right? Depends how many employees they got, depends how long the line is. I mean, they got one guy, and this guy wants to get the chopped salad. We gotta wait for this guy to pull his little chopper out. He's chopping this thing, just like, you know what I mean? Don't let the phone ring in some of these places, because they'll forget you're there. Yeah, hello? Oh, yeah. What do you want? You want the wheat? Honey wheat? Okay, yeah, hold on. And then this guy becomes priority all of a sudden. Anyway, so, this is my opinion, man. You said you're glad you caught some of the live broadcast. Unfortunately, I pulled my back out and can't be at the computer to follow along. Man, I'm sorry about that. You pulled your back out? That means you hurt your back and you. Yeah. Oh, I got you. You can't say that. I got you. I got you. Yeah, because I got back problems too, man. I think all us truck drivers are gonna. I don't know if I don't. I'm guessing you drive a truck. I don't know. I have a lot of truck drivers that follow me because I once had a YouTube channel driving trucks. My back is killing me. But working at the post office is physical. I don't just open the doors and hit a dock. Now I'm loading the truck and unloading the truck, and I barely drive even. So I know what you're feeling. And I don't know if you got one of these kind of, if any kind of chair makes it a little easy for you. But every once in a while, you got to stand up or whatever. What was I talking about? Oh, the 10-year. Let's talk about that. So you can see the 10-year. Wow, the 10-year is down. The yield is down, which means people are buying. It's down 3.9%. And I guess that's why the market is ripping. Hopefully, you can see that little decline right there. Let's get rid of all of these lines. Zoom in on that. You see this decline right here. Maybe it can continue. You look at the moving averages, you can see how it looks like it peaked, right? Maybe we kind of gonna hold here, and the market likes that. But I do think if we do start to reach, if this somehow hits a low and then we start to go higher, forget everything I just said, the market will probably recorrelate with the interest rates. And as interest rates go up, the NASDAQ especially will go down. So you almost have to forget everything I said. But I think eventually that right now the correlation is kind of broken. I think it can recorrelate if for somehow this thing starts to rip again. We'll have to wait and see. And everybody's on the growth stocks. By the way, yeah, with interest rates going down on the 10-year, yeah, I get it. But also what's making this kind of run is earnings season. Techs run before earnings, right? We ready for these guys to blow away the numbers and just tell us all the great news and stocks popping 20%, 15%, and all that stuff. We're just waiting for it. And a lot of times it don't happen, but they always seem to run before earnings. Not all the time, not 100%. And I might as well talk about one of the biggest tech stocks. I think they was bashing it on CNBC, Apple. I think one analyst came and said it's going lower. I could kind of agree a little bit. Just reassess real quick. Yeah, because I don't know. There's only one thing I look at to say, yeah, it's going low. I'm not an Apple fanboy either. I rarely trade Apple stock. All right, I'm looking at this, and the first thing where I say, yeah, it could be going lower. Look at the moving averages I got up, right? I'm looking at the weekly, and we finally got a crossover, right there, right? So the fast moving averages crossed the slow one. That's kind of bearish right there. Last time that happened was here. Then kind of a little late. Oh, there's the downturn. Doesn't happen much in Apple. But if you look at the trend, and even though you could draw a line and say, yeah, it broke trend right there. And yes, it did. Right? So that's bearish as well. But if you just do simple high, higher high, low, higher low, it's still in the uptrend with that. Right? So it's still in the uptrend. And look at the stochastic coming out from the oversold area, about to cross over and try to go straight up. So I don't know. I don't know if we can count Apple out yet. And if you look at the monthly, it just looks like maybe it's just trying to consolidate. I don't know if it actually comes down. At maybe it just does nothing. But we could just wait till Apple. And if you ever just want to stock up on Apple, you like Apple, these are the opportunities too. Right? These are like, yeah, man, get into Apple. And by the way, so right there, I think where everyone will be scooping it up is that $100 area if it reaches there. And that will be definitely the area that you could put on some put spreads, selling put spreads, or even just buying a stock. But I think the tell after this earnings season, I think it will be a good tell because we're going to see what the other tech stocks are doing and see if they rip in. And if Apple kind of does nothing, I think that could be a sign of going lower because the summer will be coming. Nothing happens in the summer. So let's see what it does. Let's see what this earnings is going to be like. And then I also think they got that EV in their back pocket. Once they start talking more about that, I think it's just going to be off to the races, you know? So, I don't know. You definitely don't want to count them out. It's funny though. So Apple probably will sink because I always hated Apple when it was going up. Now I'm kind of like, you don't count them out. Now it'll start to go down. Just some consolidation. Yeah, I agree. I just think it's just consolidating. Look what happened with, we saw Amazon with the damn near year consolidate. A lot of tech stocks is doing that. The big ones, Nvidia, Facebook do it. Look at Nvidia, sideways. It's down. I'm heavy in Nvidia, by the way. Consolidating since August, sideways. Apple's been going up. Facebook finally breaking out, but consolidating since August. All right, so Apple, it hit a high in early this year. So it's been consolidating, but it's kind of still trending upward, right? So now it's kind of back in the range. So I just think it's doing what the other tech stocks were actually doing. It was a leader. Now it's just kind of, it's tired now, right? It's just kind of consolidating, waiting for that next leg higher. And like I said, they're going to start talking about EVs more and more. Oh, I want to talk about GM, right? So we was talking about Tesla and how I was feeling. Oh, look, it's positive again. I mean, look at stocks. Incredible. I said I need more time with Tesla. I want to see a little bit more. I like to see it get above that range and look at reverse. That's impressive. Today's action. Yeah, I think it's gonna blow. I think it's gonna blow through, right? So anyway, need more. I wanted to say I like to see it get above that, and then I'm like, all right, yeah, Tesla, go. But here's a stock, GM. Did y'all see the Hummer? It's a nice looking car, man. Anyway, but look at GM on the monthly, and I'm hearing we got that straight up thing going. I don't like. You can see the breakout, multi-year breakout. This thing is almost gonna reach all time. Well, I don't know if I can call it all-time high. See, didn't they go bankrupt right here? And this is the same chart. I don't know. I don't know. Anyway, but look at that. We're about to reach all-time highs. Look at the breakout. Look at we almost there. This run has been incredible. You already seen Tesla's run up 700%. This one's up 300%. since the March low. But I want to, since that it's overbought, look at the stochastic too. Now I can see the volume coming in. I'm not saying it's going to stop. I'm not saying it's stopping here. But look at the stochastic and overbought territory. It's about to come up to this major resistance of the all-time high. But if we pull up Ford, which Ford is having a little run too, it's got a lot to go before the real breakout happened. It just broke out of its downtrend right here. It just did that. By the way, I was all over this. If you watch my channel, I was all over the Ford in $7, $8, selling those put spreads, buying, remember all these circles, and you see it broke out. So this one is just breaking out. Stochastic is, it's on the oversold territory, but it's still pointing up. It looks like it has a lot of strength, basically the catch-up trade. So I'm still liking Ford a little better, because they all trading the same in tandem. Let me see. This is up 1.89 today. Let's pull up GM, up 3.64. Whoa, they was really pumping this thing on CNBC though. But that Hummer, an EV Hummer. Anyway, I think if you look at the stock, right, I think this has a lot of room to go. Here's the breakout of that multi-year breakout, and that's $17. Just breaking out of the channel for the most part. If you were to measure that from there to where it is now, that's up 40%. I think basically, by looking at the charts alone, that the next 40%, I think, is going to come from Ford. So this stock up 40% will bring it up to $87. So does GM reach $87 first, or does Ford just catch up to GM and reach that 17. So I like this play. And you could play them both, by the way. When you have your uncertain, just play them both, especially if you're buying a stock. Buy half a Ford, half a GM. Sprinkle in some Tesla for beta. Anyway, for alpha, sorry, beta's volatility, I believe. Anyway, so yeah, I'm liking that. I'm liking it because it's new, it's breaking out, and Ford's got some things happening too with the EV Mustang. What's that other electric? Is it the EV F-150? I'm not sure, but they got some exciting things coming out with EVs as well. Tesla making a yeah. So I like the whole space again. Let me pull up the Drive ETF. It's a DRIV, and I don't know how much Ford or GM is in these ETFs. It's just sideways. That's actually negative today. But you know who has a lot of Tesla? We talked about in the beginning, ARK, which is up 2.5%. That's growing today. It's about to break out, right? I like this, by the way. I like it a lot. I like this chart. Okay, I like that a lot. And ALB, by the way, this is what I'm in. And I'm playing it for the breakout, right? Albemarle, because they produce lithium. And the one thing that's in common with every single EV is they all need lithium. Right, so this is up 1.59 today. I got call spreads, I got put spreads sold, I got some plays on in this one. I can't remember exactly, but I'm hoping that, well, it should. Yeah, I mean, it should just kind of trend higher as long as this space is getting larger. And this one's got to trend higher, I guess, unless the price of lithium just kind of comes down. Yeah, that's what's up. Anyway, you said overboard can go for a while. True. I just don't buy when it's up there, but you will hold through until you get a sell signal. WMI, did you say W? I need my glasses. Hayden, John, is that WMI? WIM? I'm looking for my glasses. Generally, I have them on the desk. You might have to spell that out for me. I think you mean WMI. Let me pull it up. I can do both. WMI, and yeah, true, Joseph. I don't know. I don't know exactly what stock you're talking about. For some reason, I can't get any waste management action. Come on up. Waste management. Yeah, waste management is WM. You must mean W or WIM. You must mean WM. Okay, you play Tesla through ARK, NEO. Through ARK and NEO through EEM. Yeah, how much is EA? I didn't know NEO was in EEM. How much is? Do you know how much offhand? I'm curious about that. We know ARK has what, 12% Tesla. I don't think NEO is that strong in EAM, is it? But that's a way to play it, man, through the ETFs. Yeah, I see. Is that WIMI? And I can see what you're saying. I just can't see because my eyes suck, man. My glasses are generally right here. Oh, I found a pair. Found a pair here, but they sunglasses. Hold on. WIMI, gotcha. I'm sorry. Oh man, yo. I don't know anything about fundamentals, okay? I'm just looking at the chart. So I pulled it up. I'm looking at the daily. Let me just pull up the weekly real quick. Yeah, I just looking at the daily, and I generally like weeklies. I don't like it. It's going down, right? It's just been trending down. But, you know, I pulled up the weekly, the longer term to see what's going on. It looks like it's almost at, is it going to fill this gap? I don't know, but it's at a low. You're looking at the weekly, you know, they tried to buy, I don't know what happened here, but look at the sell-off, right? They took it all back. They took the whole thing back and almost then some. Look at that volume. So I don't know. When I look at this, when I look at the chart, it doesn't get me excited at all. The first thing I like to look at when I just pull up the chart real quick, know nothing about this, but I just want to see it going up. I just want to see some kind of, remember, because what goes up just continues to go up, right? What's that law? Relativity or something like that? What goes up, right? What goes down continues to go down, right? So if we pull up the hourly, and we know for the last week or so, like the NASDAQ has just been ripping. And this one's kind of been going down. It has a little turn. See the difference? Look at NASDAQ, right? So why did no one want to buy WIMI? Right? And volume is even drying up. There's a little excitement here. And sometimes these candles and that volume gets me excited. But let's see. I think it needs more, you know. When you get up here, see that selling? I don't know what brought it down. This drop, right? If you go from here to here, what it experienced a 14% gap down. It went as low as 19%. I don't know what happened that day, but you got people trapped up in here. So you can look at the volume. So when it starts to come back up, I think sellers are going to hit it again, right? Somewhere in there, maybe even a little lower. Just, you know, so I think they might hit it again, you know, so I don't know. This just doesn't get me excited to look at. The monthly is not bad though, right? I do see it going up. Wrong line. Can y'all see above my head? Yeah. Let's put that up there. Right, I can see it going up, but if you do that, it kind of broke trend there. You know, maybe I'll draw a better line for you. It's kind of trying to break trend. So if you're really excited about this, you see this candle right here, that low is $5.59. Maybe you could buy it and just get out before that. If it breaks $5.59, just be like, I'm done. If it goes lower than that candle, say I'm done. Yeah, I mean, from the high it made just in February, which was $12.94, to right now, it's down 50%. You know, so stocks that are down, yeah, I don't know, I just 50%. You know, I mean, that's a lot of ground to make up. To break even on a 50% down, what is that? You got to go up. Yeah, you got to go up 100%. Is that what it is? 50% down, 150? Yeah, you got to go up 100% to break even. So, yeah, I don't like that. I don't like that. I think it just needs more time. Also, look at the wicks here. And sometimes these tell the story. You can see this wick right here. I don't know what happened up there. That's some good news. They sold that off quick, right? You see that wick? It's up here. It's up top. Wick, right? I'm just going to wick. You see all of these wicks. Every time this thing ran, they sold it. They just sold it off. It can't hold any kind of rally, right? Damn near for the last month or so. Here, it didn't even try to rally. It just gave it up. And then now it seems like it's given up. So if it were to make any room and get in this area, I mean, there's sellers up there. You know what I mean? So just be careful. Yeah, I'm just not liking it. I do like the monthly a little bit, but I don't like the daily and I don't like the weekly. And since I like the monthly, that means it'll take several months, right, for it to kind of look like it's doing something. You know, so there's my opinion on WIMI Hologram Cloud ADR. American Depository, so some foreign stock. Anyway, that's 100% potential. Yeah, exactly. It took me a while to figure that out, but that's one of the first things they say about, because sometimes when you got to realize that. Like, some people will hold something going down and you really don't. Like, Mike, I'm down 50%. Yeah, you got to get 100% gain to break even. And we know how hard 100% gains are. We don't talk. No one's talking about 100% gains. I mean, because they're hard. It's like impossible. And we know if you do get it, it takes time. You're not going to get it tomorrow. If you do, you're straight gambling. If you get 100% game tomorrow, next week, it's like you're really kind of gambling. Even though you can do it, like I could set up like say a Microsoft put spread to give me 100% gain in 3 weeks, but it's going to be close to the money. To do that, it's basically selling a put right at the money. So meaning it's right there where the stock price is, and if it goes lower, I'm going to lose all my money. So it's definitely a higher risk to get 100% gain. So yeah, that's how and a lot of people, these guys, you saw that gap down. They a lot of people lost money here, and as it goes up, they're going to want their money back. Or they might not. They might change their mind and say, you know what, this doesn't look like it's going back. So you just got that selling pressure, right? Something has to change to some kind of good news, or just something has to change to kind of get rid of that selling pressure, because there's people holding a bag up here. You have to be careful. They want to give it to you, you know. So I'm not necessarily liking it. Let's watch it prove itself. You know what? If it can get above that high again, right there, that's when I'll say, all right, yeah, maybe there's something here. And I know that's far away from now. That's 100%. But this thing's got to prove itself a little bit more. Or, and, you know, I could just say this. If you believe in the technology or whatever it is that they do, I mean, just go ahead. Yeah, this is a sale. You know, just keep buying more. I mean, if you believe in it and you know what's going on and you want looking at the fundamentals, because I didn't look at one bit of it, scoop it up. You know, this is a sale, right? Because you know you're reading. You're not trading, looking at charts or just hoping to make a gain like maybe half the people up in here. By the way, I also don't trade stocks this low. If you notice all the stocks I pull up, they're hundreds of dollars, even thousands of dollars. I like playing with those. And you can see what happened with AMC and GameStop and other stuff. I just feel like they can't be manipulated. We know everything can be manipulated, but you're going to need big money to be moving Amazon around. Big money to be moving all of them, like even Apple. I know it's only $100, but there's a lot of shares out there. This thing's a $2 trillion company. You need big money, right? So I don't want the guy in his basement moving a stock or a small fund. I was going to say like the Archegos, right? But I don't know I don't know what the hell they did. They wasn't that small. I don't know, whole banks and, yeah, forget I even said that. But basically, I don't want the small dude moving a stock and messing up my trade. So I like big companies, big market caps, and it kind of eliminates that aspect. Now I know you can get a Goldman or whatever. They playing around all the time. They can manipulate some stocks. They can throw billions behind it and make certain moves happen, but it won't last long. You know, they can't just manipulate it to the ground and that's it. There's no more Amazon. You know, so that's my opinion on that. You said it has potential. China trade war, they did. Yeah, see, I don't know all of that stuff. I'm just totally talking about what I see on the charts. You know, it's EEM holds less than 1% of NEO. You like EM for market exposure? Yeah, I have. No, I don't. In my 401k, I'm over 30% in international, so I can kind of compare that to the EEM. You said you ain't buying at 12, you buying at 6. Yeah, that's what I'm saying. Just buy it now. But here's the thing: sometimes you just gotta let it prove itself, and sometimes you just want to watch. You know, so if you ain't buying at 12, you're buying at 6. That means you're willing to sell at 12, just like everybody else is, and then it ain't gonna be able to prove itself. So I want to know. I want to be for sure that this thing is going up, and that everybody holding the bag is comfortable holding the bag, and that we can get higher prices. Just because it's 12, don't mean you can't sell it at 20, right? Or 20, 30, 40, because it's going up. So think like that, right? If you like, man, I don't like Amazon at 20, at a 2,500. Well, it's 3,200 now. You know what I mean? And when it was at 2,000, let's say, hey man, 2,500 is a good price. And you're like, yeah, that is far away, but if it's going higher, who cares? You know what I mean? So I think if it reaches that point at $12, which is a long way from here. It's 100% higher. I get it. It would kind of prove to me that it's going higher. Then we just have to worry about these guys over here that bought that, these bag holders over here, right? So I get all that, and that's why I said if you into it, you believe in it, and it sounds like you are. It sounds like you did your research on it. It's a great price, right? They giving it to you here, right? So that's my feeling on that, and you just scoop it up. I mean, I think you trade different when you believe into something. Like if you really believe in Tesla, every time that sells off, man, that's buying opportunity. Just buy it. Who cares what they're saying? Who cares? You know, right? You know, and you want to own a bunch of it. You know, you got your own personal goals, so you buy it. And that's exactly what Cathie Woods was doing all the way down on Tesla, right? And I get her a little email. By the way, you can go to ARK Invest, ARKfunds or whatever.com or whatever, and you can sign up for her buys and sales. And you get the email every day at the end of the day of what they bought and sold and stuff. And it's kind of neat if you're into that. But I noticed every sell off, she's buying, you know, so she bought all the way down. You said you totally agree. Chinese companies are not small caps, though. 5G will see a move in VR. AR game Pokemon Go example of AR capabilities. Well, that's let me see something. Trade. Do I have market cap here? Nope. It's a $559 million company. That's a small cap. It's not even worth $1 million. 123 employees. Seems like a lot of employees for a $500,000 company. Meaning, you know, if someone wants to buy this company, they just need a. Well, I don't know exactly where they draw the line of small cap, mid cap, whatever, but it's $559 million. You know, I like to trade billion-dollar companies. Let's put it that way. Even Apple's multi-trillion-dollar companies. You know, so I just don't so don't get offended when I'm saying small cap or whatever. But it's a small company, man. It's 559 million. There's 86 million shares outstanding. The float's a small float. So it's only 30 million on the float. That's a lot of that's a little bit. That basically this thing can move. It has the potential to move. There's not a lot of shares out there. Where is the short? It's not shorted a lot either. Only 5% short. Yeah, I know nothing about it, so just be careful. I'm just kind of. The Dow is still selling off. I'm just trying to bring up the chart. Yeah, they're making money. Actually, that's pretty nice. That's nice. That's nice. 2017. 192 mil. They doubling their revenue every year for the most part, and their earnings. I like it. For that little quick analyst whatever. I like it. I still don't I see augmented reality. I like it. This could be a deal. These guys is making some money, you know. So, but I'm just still looking at the charts, man. That's all I'm saying. I like it. I do like the monthly. I do like the long-term chart. It looks like it's trying to break here, right? So, I mean, all the volume came in and they sold it. I don't know. I'm just not liking the short-term chart. So, yeah, if you believe in it, yeah, scoop it up. This is the time to scoop it up for sure. You said watch a video on the tech. That's what's gonna happen. They will get bought. That it does look like a company, one of them buyout type companies. I agree with you with that. Tesla is overpriced. I bought some Tesla at 380, sold at 650. Mm-hmm. I totally agree. Chinese companies are not small cap. Okay, yeah. Okay, I got off. Did I miss Joseph? Are you self-taught, Dre, or do you have a mentor? I am self-taught. I've been trading for since like two. Well, it's hard to say. I should say actively, maybe around 2008, 7, 6, somewhere around there. Inactively, but very reading every book I could possibly in the education phase. 1995, in there, bought my first stock in 1998 when they was like $50 commission to buy, $50 to sell. And of course, I can't trade. I ain't had that kind of money where I need $100 profit just to make a round turn. So back in that era, and then I was kind of jumped to mutual funds, but I'm learning about companies and all of that stuff because I couldn't afford to trade. And then when trading became affordable, it became affordable for me when Thinkorswim came out. Oh, when was that? 2006 or 5 or something like that? And I was one of the first Thinkorswim customers. And what was I paying? $9 a trade? I can't remember. $5 for options. That's when I started trading more actively and whatnot. But self-taught on everything. No mentors. I watch a lot of YouTube videos. I like Tasty Trade. I like Tasty. I like what's the guys? Shoot, I can't think of their name, but they've been on Thinkorswim forever in the chat. I can't think of his name. I want to give him props too. So those are like the only two guys I watch from where I'm like, I'll actually listening to what they saying and take it in. A lot of other people, I just listen to it as entertainment purposes only because I like my style. I really keep it simple and basic with these charts. I don't got a lot of shit going on. I'm not going to tell you any kind of technical stuff. I could barely pronounce the words that a lot of other people use. I just kind of look at stuff. It's really easy in my opinion. It's going up or it's going down or go sideways, right? You can look at a chart to see if it's going up. So I play that game. Look for my video with my girlfriend on the thumbnail, right? You're going to see the pretty face. Click on it. And I teach her. We just go through stocks. This going up, it's going down. I used to do it with my daughter. This going up or down. They'd be like, up, down, down, up, down. I like that. That's all I need to know, really. And then this is why I buy long-term leaps, right? I trade options way out there because I let that upward trend continue to take me up or down. Well, if it's down, I don't usually buy things short things. I like things going up. If it's going down, I just wait. So when I pulled up WIMI in the daily and the weekly, it looks like it's going down. So I'm like, I can't mess with it until it proves to me that it's going up. And that's all that's about, John. That's all that's about. You know what I mean? So yeah, it sounds good, looks promising and all that other stuff. But I just want to buy something that's going up, man. And I don't care if I buy it higher because I'm a buy high, sell higher guy. I'm not a buy low, sell high guy, right? I'm a buy high, sell higher. I like that. I have no problem not catching the bottom. You know, I just want to be able to buy something and sell it tomorrow for a higher price. That's it. I could care less where it came from. And I think if you, I wouldn't say change your mentality because you got to do what works for you. But because you got your buy low, sell high guys, and then you got your buy high, sell higher guys, and you just got to do what works for you. I'm a high, sell higher guy, and I guess you're a buy low, sell higher guy. But sometimes you could buy low and it goes lower, and that's even for buy high, sell higher guys. It can go lower, and stocks can always go lower unless you buy it at zero. Actually, it could go to 0.00 and all that fractional stuff. But yeah, you see what I mean. Just think of this, man. When you buy something, you just want to sell it tomorrow for a higher price. That's it, right? When you're ready, you just want to sell it for a higher price, period. Keep that in mind, and I think you will trade better. And that'll put you at a buy high, sell higher guy. That's why I'm a buy high, sell higher kind of guy, right? If you in real estate and you want to buy and flip a house, you just want to buy. You don't want to be able to buy it higher, sell it higher, then you paid for it minus all the expenses you would put into it with new roofs and floors and all that stuff, right? I just want to sell it to the next guy for more than I paid for it and take that profit, right? So that's me, man. He said momentum. I guess that could be a momentum kind of trader, but not. I don't want to be like tomorrow. I'm not the tomorrow guy. The next week, I'm not the Nigerian brothers where you buy this is hot in 3 weeks. I'm selling. I'm thinking years out, and that's why I stick with the bigger stock, the big boys, because you can't help but these guys have proved it to you. These guys are getting all the money, right? They always say like you could take the 5 richest guys, let's say. And so I don't want to name them, but I know Bezos and all that stuff. And then like they sprinkled out all that money, right? The money pipes right back to these guys. It just keeps going to these guys. They got the pipes, right? It's like a sewer, a leach field. And when doesn't matter where they sprinkle the money, it ends up into these guys' pockets. That's why you got to invest in these guys, right? And that's why, I was making a point and I forgot it. That's old age. Yeah, I mean, I like him. I like Tony Zhang. He's kind of, he's like a tasty guy, in my opinion. He follows a lot of what they do. But yeah, I know who you're talking about. I can absorb his stuff as well. But he kind of trades like me, I think. He's a spread trader. I think he's more of the put sell guy, right? But I don't do many of those. Like, I do those. I guess I do that more than not, but I don't do it short term because I do it long term. Now people will tell you that, well, the data, like you're not getting any decay, right? Because the decay curve. Oh, I just lost my camera, guys. I think my battery just died, so you can't see me no more. The decay curve is maybe I can turn it back on. Nah, the battery probably died. The decay curve is in the 60 days, right? The last 60 days of the option. That's when it really burns out. But I like selling put spreads a year out, even if it's 2 year out, because what's working on my side is just the natural force of going up, right? 70% of stocks go higher or something like that. That's what's working on my side. And it gives me a long time to be right. And if I'm right, I get 100% gain. Right? Like I got put spreads on Google that I sold, man, almost a year ago. It's almost time for these things to go off. 1700, I sold the 1760, 1740. So I'm way down here. 1760, 1740. Somewhere, I'm in this area with the put spread, right? I want to draw 2 lines. I don't think Google's going to go back into that area. I mean, hold on, let me pull up the weekly again. It could. I mean, now it's at 2,200. I mean, Google, for it to go back in that area, well, it needs a decline of 25% for the most part. I mean, so it can happen, but I don't think so. People would be all over Google if it went down 25%. I mean, if it did, I mean, it would be like this area. I mean, yeah, the pandemic went down 30%. We basically need another pandemic for my spread to go bad. And that can happen, I guess, if there's more strains. But, yeah, so that's my thing, right? And I just let this put spread, I can let it expire. Or I'll probably buy it back when it's a couple $100. But it's almost there, too. Right, so I like those kind of trades. I'm way down here. When I put it on, the price was, I almost put this on at the money. The price was somewhere around there, and I put that spread on. Now look where it is, right? Because time was on my side, and the 70% of stocks go up, right? So I like that. And then when it gets closer to that 60-day mark, if I hold it that long, then I'll get that data burn, and everything, So. And patience, man. This patience. We really need that. This is a long-term game. I did well last year, and I broke records. I was up 330% last year in my trading, and but it's not a big deal. I don't even talk about it. I think that's the first time I even said that. But so is everybody. Kind of. I mean, Kathy Woods is up 155%. She don't do options. She's just buying stock up 155%. So yeah, that's what works for me. You just got to do what works for you. I try to teach what works for me, but my game is patience. And I'll do some short-term trades. I got the short-term trades going on. Like I just bought on the Qs, I just sold some put spreads that expire 17 days from now. The 313, the 312, 307s. I sold them for 30 cents. Plan to buy it. I might let them expire, but I plan to buy them back at about 10 cents. Not even half, less than half, about 10 cents. They expire next Friday. And so if the NASDAQ were to crap out, right now it's 331. I sold the 312s for 30 cents. Like 15 of those bad boys. Okay, so 30 times 15, I'm going to make $450 by next Friday. Now, since I sold them for 30 cents each one I got $470 risk, right? So 15 of that is a $7,000 trade basically, and I'm just trying to make $450. The odds are in my favor, right? According to the Delta, I got like a 12% chance. So I sold the 12 Deltas, so I got a 12% chance of it working out. So I'll take it, and if it goes to, I plan on exiting. If it goes to, it depends. I'm always changing it, but basically not maybe like a 20 plus delta, right? It a couple of factors I look at. I look at maybe like the delta. If it goes double, where it's worth 60, I got to buy it back in a 60. I'm trying to collect 30. If it goes to 60, I might want to sell. But then I look at the delta. I kind of look at the time. I just kind of look at a bunch of things when it actually happens. But once the delta is over 20 and I have to pay 60 cents to buy it back, a double, now I'm looking to sell. Now I'm like, okay, I don't sell it right then and there. I'm like, okay, do I want to sell this? If so, I got to do it now and see if I can think of anything that's going to make me hold on for another day. Since it's a short-term option, one day can totally turn that trade around to where it's positive, right? Because now I'm messing with gamma, right? And gamma really, stocks start going one way or the other, it totally changes those option prices like quick. So that's another lesson in itself. But yeah, so I do have my short-term trades going on as well. But the real money that I make is from the long-term trades. Yes. Anyway, it's doubling. Imagine I put that $7,000, like say on Microsoft, and wow, Microsoft break it out. And I sold I sold a 220, 200, or even a let's say a 240, 220. And I sold $7,000 worth. For the most part, since I'm close to the money, I'll probably collect somewhere around $6,000. I'll almost double my money in betting that Microsoft stays above 240 for the next year. Right? I'm betting my money on that. And there's a good chance. I mean, these guys just got that multi-billion-dollar government contract to make VR headsets or whatever they're going to be making. There's a good chance Microsoft is going to stay elevated. I know with stocks, anything can happen. Right? But there's a good chance it's going to stay above 40. Look at it breaking out right now. I mean, it took a pandemic to drop it 30%, right? It took the world to shut off to drop Microsoft 30%. So there's a good chance that would be a winning trade, and to make $6,000. And then if you were to annualize that, I won't say annualize. So let's say $6,000 divided by 12. I'm making $500 a month. It doesn't seem that way. I know it doesn't seem that way because it's a long-term trade, but I'm making $500 a month as long as Microsoft stays where it's at or goes higher, which is what we would want, so we could take the trade off faster. So that's what's up. That's how I trade. Sorry, my camera's dead. Anyway, I'm going to go ahead and end this video. Hopefully you like it. Subscribe. This is a long-ass video, man. I don't even know if I'm still live. Yeah, it says I'm still 2 hours. Wow. All right, so it's 3 o'clock. The market's open for another hour. I like tech. I think we all good. As long as these 10-year, keep an eye on that 10-year. Or if you can't bring up that TNX, the TLT, keep an eye on this. And TLT is up. As long as this thing can kind of keep going up, I think we could be safe. Upper side, as long as there's no sell off, you know, when it's like down 2-3%, yeah, then it's gonna take the market with it. But see how far it is away from that average. I think the TLT probably at least comes to here, right? At least touches trend again before it wants to head lower. So that's my bet. And that does that bring us out into April? No, this is the weekly. Yeah, I think be cautious. I think we need to be cautious after earnings season. Just after earnings season, when there's nothing to talk about, stocks tend to suck, right? There's no excitement. There's nothing to just give it lift. Look at the stochastic and the TLT going up, right? It's still oversold. I'm trying to go up. Hopefully, let's root for this thing. Keep the market up. All right, Mr. JRH, man, I'm out of here. Thanks for watching, man. I appreciate you. Joseph said, thanks, Joseph. I think this is the first time me and you talked. So thanks for coming in. Thanks, John. Good luck with your WIMI. I am going to bring that ticker up from time to time. I might be that guy that buys your shares at $12. Oh, man. Oh, yeah, that might be me. And everyone else that's in here, I'm trying to scroll back, looking at the comments. The jewelry box, of course, Errol, AL Beauty, and thank you for dropping by. Mikey Cole Lasaka. He says he loves my analysts and observations. I appreciate you. I missed that comment, so forgive me. I missed that. Damn it. He took away his one message. Then it says Amazon has no legs. Okay, he loves it. Yeah, appreciate that. McDonald's. I'm just looking at my comments, guys. All right, I think I caught everybody. All right, so thanks for watching, y'all. This is Dre Trades. Test me on. If I don't make a video, I'm on Twitter. I'm on Instagram. Mostly Twitter, but that's Dre Trades. So check me out over there. Or hit a comment in any video, and we could talk. All right, I'll talk to y'all later, man. Dre, I'm out.